Right, good afternoon, everybody.
Hey, why are you smiling over there,
You had a good day, huh?
Sorry, just got
Billy?
out in here.
Billy causes problems? Tom, how are you doing?
All right, guys. I am an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group, and you should carefully consider whether trading is suitable for you in light of your own financial condition. Do you guys want to come say hi to everybody or what? Here's the position disclosure. Now you can talk in the background all you want. Compliance gets very upset if the first thing that I say as soon as I'm on the radio is not the disclosure.
All right, guys. Good seeing you all.
Right, yeah, good seeing you.
Good seeing you, Billy.
What is this, like your parking spot here?
I'm sorry. I'm on the way out.
Cody, that was your buddy Tony Carmelli who was just here. All right, let's I think am I echoing?
No, you're not anymore. I turned it off before. You were when I had the speaker turned off.
Oh, that was Josh's fault?
Yeah, that was my fault.
That was Josh's fault. All right, Spies here up, wow, still catching a little bit after hours. 3.2% as of right now. Q's up 4.6%. Holy cow. And IWM up 3%. I mean, just a massive day. Really exceeded my upside expectations. I thought of Powell. I thought that, you know, Powell was going to come out with a mixed message, and the market just ate it up. Just ate it up. And even if you were watching the press conference, it was the way he spoke. Like, he was like jovial. He was jolly. He was, you know, Santa Jerome. He just seemed so relaxed up there, like almost was given like a mission accomplished vibe, even though the mission is not accomplished. And it just created fireworks. I mean, what else is there to say about it? I thought maybe we could get a move to SPY 400 today. We went to SPY 407. And this is how markets work, you know, just a feedback cycle came in of buying. It just buying led to more buying, which led to more buying. $400 was a key level. I mentioned, you know, book a little profit in front of 400, but we cleared that. So that helps to trigger the next kind of wave of buying because that resistance level breaks. And then we had that 200 day at 404. You get above that 200 day, which is still declining, by the way, which does mean that, you know, on big time frames that rallies can still fail. But once we cleared that 200 day, I think that has a lot of automated strategies and fund managers who do trade off the 200 day, or there's going to be a lot of stops that are kind of clustered there. So that kind of triggers another wave of buying. And you could also argue that we are breaking or at least testing this really big picture downtrend line that we've been in. So you're just a feedback cycle of buying really kind of coming into the market. Really, really incredible move. The trade of the day was the buy off of this pivot. I'll just jump right into that. The trade of the day was going long at 1:45 p.m. off of this continuation hammer that got called out. And the Qs and the IWM gave an inside 5 after that doji to even make it easier for anybody who wanted to be able to get stock. I still liked the idea of giving to the low of the hammer, but really, especially if you're just a momentum trader, you could have just bought stock and gave to the low of the inside 5 on the Qs and the IWM as we look for the next leg to kind of come into the market. And that's really exactly what happened. So market certainly interpreting him as dovish, feedback cycle of buying in the marketplace. We're still in a low liquidity environment. We're still in an environment where there's a lot of funds that are hedged or short or at a minimum with a lot of cash on the books, and performance chasing might have to start coming in. I mean, we might not be done. You know, we can have a conversation on whether or not the stock market belongs up here. And I would have argued, you know, when the SPYs were at 430 in August, that the market didn't belong up there. But that's the way these feedback cycles work in the marketplace. So this is a massive day, but it is only a day one. It reminds me, even though the candle itself is bigger, it reminds me of the recent CPI day that we just had. This candle is bigger. The CPI day, including the gap, is bigger. but it reminds me of that where, you know, let's measure our extension here on the daily chart as of the end of today. SPY is trading at 407 with the ADMA at I can't read that 399. So wow, you know, we're not even extended by more than $10. We could really easily have a day 2 tomorrow. You know, if we were extended from the ADMA by more than $10, I'd be like, all right, we're gonna have to be really cautious tomorrow, and maybe we gap up $2 tomorrow. I don't know, and that gets us to that $10 worth of extension. But today is technically only a day 1. It's coming from an area of equilibrium. That's the reason why we have such a big bar and we're not like $10 plus extended, is because we're coming from this area of equilibrium initially through it. So we really could have a day 2 or a day 3 and get further follow through on this, because we're not that extended. Getting above the 200-day changes the dynamic of the market. Getting above that downtrend line changes the dynamic of the market. And if there are funds out there that need more long exposure or need to get rid of short exposure, they probably couldn't get it done between 1:30 and the close today entirely. So, yeah, so just really impressive, and maybe now we are once again set up for that Santa Claus rally type of situation, or rally into the year end that I had been looking for since the CPI day. And honestly, a lot of this price action here was really difficult. However many days this is, I'm gonna count it because I'm curious. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Of these 12 days, I really only thought 2 of them were easier days. The other 10 had been difficult. This environment these last 12 days, since that CPI number, overall has not been easy. This was a pretty decent day here that we were able to nail that gap down on the 17th. This was a decent day. We were looking for continuation, and we got it on the 22nd. But for the most part, this price action has been sell the gap off, the gap up, chop around all day. Sometimes we rally into the close, sometimes we don't. Like, I think most of these bottom, like low side tails on daily candles were afternoon rallies that were kind of coming in. For the most part, they've made this price action here extremely tricky, and we finally got the continuation here today. And look, they really gave us a chance to get in. You know, if you didn't have exposure coming into 130, and I can't fault you for that, your opportunity was this 145 continuation hammer. You get the extension. This is exactly what we look for. We get the extension that comes in. You know, we're communicating. Market's extended. It needs a degree of time and price correction, and then that's exactly what we got. Perfect price correction down to the ADMA gives this tail. And as this tail was coming in, before this candle was even closed, I think we were still trading at like, you know, 397.60 or 397.50. I was like, you can try longs off of this low. And SPYs and Qs followed that with an inside 5, and that was just the trade of the day here. Took a short here actually at highs for the same, you know, extension reasons. We're getting super extended here. Pat was looking at the VIX. He was short the Qs with me. We got this little bit of a pullback. That was enough for me to make a few bucks on my Q position. I covered 2/3 of it. Got stopped out of the last third when new highs came in. Got to have that stop loss in. Can't fight this market. And then we got a whole nother leg up. The IWM didn't participate in the last leg that well. That is something I certainly was noticing. The SPYs and Qs were really rocking and rolling here, and the IWM kind of slowed down on its participation. Picked up again in the last 10 minutes when we had imbalances come out. But these FANG names were ripping. Apple closing up almost 5% on the day. Apple really getting back above the level that it broke down from. This Apple kind of went in the penalty box for me when it lost 146. That was an important support level. It lost it for 2 days, but it was able to kind of recapture that, though it wasn't really on my radar in the same way. The ones that I've been more focused on have been Microsoft, which I liquidated my Microsoft position today. Meta, I liquidated my Meta position somewhere towards the highs at the end of the day. Got out of that one. So those were both great. I still have some Amazon, which we've been looking at recently, you know, kind of cleared up above that 94.50 to 95 that we had been looking at. Google, we had discussed 97.50 as a spot to be involved in Google, and then 99 as being the key level. I was able to clear both those key levels and actually get above and close above $100. I still have some Google on the books, looking for continuation on that. but yeah, just really solid. I also liquidated my Neo position today into that move, so that was decent. I got out of Shopify. I got a Shopify again into this move. Shopify actually cleared that $40, so might have to revisit that and be a little bit more aggressive on it. I didn't want to buy through 40 in Shopify. I felt that the market was too extended at that point, but it was nice. My new position today that I got into that I still have is this Woof. This Woof was not easy, by the way. I had bought a feeler pre-market at a terrible price. I bought a very small feeler, and I even said it. I was like, I kind of want to be in this Woof because they could squeeze it, but I really don't want this price. So I just bought a little bit at like $11 pre-market just to kind of have it on my books to watch it. And then it immediately sank on the open. I added a little bit, kind of off lows. And then this price action just wasn't great until this pivot kind of came in, and that was the spot to maybe be a little bit more aggressive with it. This was difficult. Powell probably saved me a little bit on the position to give me a little bit of follow through on it, but it really was not exactly what I was looking at, or looking for, I should say. And then there was just a whole bunch of other stuff out there that you guys were involved in. I honestly can't remember all of it, but the communication was great. Rex and Mark were talking about Netflix into this. I remember at one point, oh man, I can't remember where, right here. When we got the first up move in the market, to go back to that real quick, I know I'm a little bit all over the place with my thoughts. We got this first up move in the market, and I was looking for the technical price or time correction. What I said was, pay attention to what holds up best in a price correction. That's what you can look to go long. And first Rex and then Mark was like, look how well Netflix is holding up. And that was a great call. Netflix was great how it's holding up here. So this is exactly one to go to. Held on like a champion. Could be long versus that low. Got great continuation off of it. Airbnb was another one that I thought held in very, very well on that pullback for some relative strength for some continuation. So I wasn't involved in Netflix or Airbnb, but those were some great call outs from the team, and there was a whole lot more even beyond that. So overall, I would certainly say that the market on the upside exceeded my expectations. But it goes back to what I'm always talking about on having the long positions on with trimming and trailing. And even though I did lighten up into this move and I fully liquidated a few positions, I still have more than enough on to continue to get paid if we're able to get a day 2 or a day 3 here. And yeah, I mean, we overshot my expectations, but I'm not just liquidating my entire portfolio of longs at SPY 400 because that's where I thought was a reasonable price target for today's price action if Powell said the right thing. I want to try to hold and have a game plan to maximize my reward if the bigger move comes in, even if that bigger move is not necessarily what I'm expecting. Again, just from a risk-reward perspective, when you're making that money, you're in that win-win situation. That's when you want to try to hold to capture the even bigger move. I think that's all I got. So really good stuff. Really good communication from the team. A lot of you guys did really well. I'm pumped to see it. And we're positioned for it. The last 12 days, like I said, 10 of the 12 days have been really hard. But we stuck with this same saying every morning, right? We're going to be cautiously optimistic. As long as the market continues to hold key levels, we're going to be cautiously optimistic, and we're going to continue to err to the side of being long than being short. That's what the technicals were telling us. Cautiously optimistic. And we never broke down on those levels. The Qs in the IWM are certainly a little bit scary. The Qs getting below 280 at one point yesterday. And the IWM early weakness, I forgot about that given the insanity of the afternoon. That IWM early weakness with that inside and down had me very concerned. 180.50 is the real line in the sand for the IWM. The low of the day today is 180.79. Qs, 280 is the line in the sand. Low of the day is 279.97. Like we really tested the long thesis there with this market, and then Powell kind of came out and put his Santa hat on and saved the day. I'm sure he's going to be looking at the market and going, oh my God, what did I do? But for now, here we are. I'm sure he'll send out all of his hawkish Fed member cronies to speak as bearishly as they possibly can to try to bring this market down. But yeah, really, really good stuff today. And yeah, the genie is out the bottle. I like that. So that's really all I got. That's really all I got for you guys. Happy to answer any questions on anything that you guys traded or on that price action from today, or broader questions that you have about a day like today. There's a lot to kind of unpack. In some ways, it feels like it's straightforward, but on the other hand, it feels like there is a good bit to unpack. So any questions you guys have, I'm happy to answer. Just scrolling up here in the virtual trading floor. From Paul G. What would you say about tomorrow if I missed trading in the afternoon? Yeah, for me, day twos are always hard. You know, if you're coming in and you're looking for longs tomorrow, you're going to inherently have a worse risk reward and lower probability of success. But I really do think that a day two is possible tomorrow. So I would say, you know, if you're coming in tomorrow and you missed today's, you know, the afternoon rally today, you can take those long positions and put your risk in on the small time frames, but you have to recognize that you've got a decent probability of getting shaken out of trades with the idea still working. Because the stop loss that you have to use for like SPY as an example at this point to now know that your idea is wrong is today's low. And you're not going to come in and buy a flat open or an up open or even a small down open tomorrow and give to today's low. And that is why the risk reward and probability of success tomorrow is inherently going to be worse. Like, you can still find trades that have lower risk because you're using a 5-minute chart for tomorrow, but they're going to have a lower probability of working or a higher probability of shaking out because you can't use the stop loss where you know the idea is wrong. Or you give the stop loss a massive amount of room, which gives you a worse risk reward, but then you have the higher probability of success because you're given the right stop. So I do think that we can look for longs tomorrow. We're not too extended where we can't. Let's see where we gap up, or where we gap to, I should say. I don't want to promise we're getting a gap up. I really have no idea. But let's see where we gap to tomorrow. And, you know, you can put your trades on. I think that shorting like 408 right now on the SPYs is too early. If we're getting above 410, if we're getting to 412 tomorrow, then I think we can start looking for shorts in the market with a little bit more conviction. But I think 408.
420?
Huh?
I don't think we can go all the way to 420.
I'm just mean for tomorrow specifically. Josh asked me, I don't know if anybody was able to hear, if I think we can go to 420. Sure. I mean, we're in an uptrend. We're in an uptrend on the small time frame. We're in an uptrend on the intermediate time frame. We're not in an uptrend on the big time frame, but today is very near the big time frame going to neutral, which is huge. So could we work our way up to 420? Could we work our way even to all-time highs? I'm not going to make that call. That's not my game to make grand calls with no data or facts or anything to back it up. But once the trend is your friend and the trend becomes to the long side and that starts to give time frame continuity, which we do not have yet, by the way. Let me just make that clear. We do not have full time frame continuity to the long side. We have an improving situation as far as time frame continuity goes, though. Small picture bullish, intermediate picture bullish, and arguably the big picture is going from bearish to neutral, and that's a big change if that's actually happening. Yeah, I think for tomorrow, you know, if we're able to get to like above 410 into 412, you can start looking for, you know, shorter term shorts for a technical pullback to the 80 on the daily chart, something like that. But really, that sets you up for a higher low for continuation back to the long side of the market. So yeah, I hope that helps, Paul. Gosh, your call, go for the one staying strong. I went around 144. I went small Netflix and it made my best day yet. On small Netflix, I love it. That means you held it really well, and that's awesome. Really annoyed that it shook me out from my AMD and Netflix position at 130. No idea why I didn't try again. Yeah, just make sure, you know, I know you typed into the chat something about getting shaken out of a couple positions at 130, but you were also like, why did I raise my stops? I had no reason to raise my stops, and I just kind of did it and just kind of tightened up. I understand the fear of holding positions into an event. I totally get it. But it's either do it or don't. If you're going to hold positions into an event, you really got to make sure that you have the right stop loss in place, because it's very, very easy that the algorithms go crazy for 3 seconds and they just trigger something on one side of the market and you're getting shaken out of positions. So you really need to make sure, if you're going to take that risk of holding something into an event like this, that you're utilizing the correct stop loss. And otherwise, just you can liquidate the position into the event if you don't want to take that risk. So, live and learn, Kosh, but fantastic job getting back involved on Netflix when it showed that relative strength, and no problem for the call on my end. Also, you should be thanking Rex and Mark for finding the symbol, because that was not the one that I had seen from strength, even though it's what we were looking for. So again, it's just great teamwork. Thanks, Mark. Appreciate the compliment. From Dave, anything stand out with semis like AMD? AMD up 6% here. Yeah, so, we had communicated in the morning meeting today that you could go long AMD through 74.50, the inside and up. I don't think that there's anything particular to note here. AMD is up 6%. The Qs are up 5%. So, these semis tend to have a little bit of a higher beta than the Qs do, so I'm not surprised to see that AMD is up more than the Qs are. But it's the same thing. Just a fantastic day one. How much is NVIDIA? NVIDIA up 8.5. Wow, 8.5%. Back to these 170 highs. NVIDIA really wasn't on the radar for me. AMD I thought had the actual setup, so I hope some of you guys were able to capture that trade as well. But I don't think there's anything particularly notable. You just want to make sure that these things are leading, and they are. From Mark, I had a question. Can I walk through the Bill K chart? Sure. Bill could probably walk through it better than I can. I don't know if Bill wants to write something out for us, but I can. Let me... Does it mess you guys up if I'm showing the VTF on the VTF for you guys? But before I say that, let me bring it back over here so I can actually see your response. It doesn't mess it up? Okay, cool. I don't know. I feel like sometimes when you're looking at a screen that is the screen kind of thing, you get like that crazy mirror effect. Yeah, so this is the 0 DTE gamma chart. And then the green line typically represents, I believe, the previous day's close. So this means that if it, this is what the profile looks like if it's trading below at various prices. This is what the profile looks like if it's trading above at various prices. And this is positive gamma and this is negative gamma. And I don't really know how they come up with these numbers, like 50,000, 100,000. I don't really know what that represents. I just understand how positive and negative gamma work, and I understand how larger amounts of it work versus smaller versus, larger amounts versus tighter amounts, like the closer you are to 0. So basically, the way that dealer gamma works in the marketplace is when like options positions are being used, the dealer who's on the other side of it, so like a market maker, they want to be hedged. They don't want to be taking market risk. So if someone is, involved in one of those large sweeps that Pat calls out, like one of those big bullish sweeps, then they're going to be coming in on the other side of that. And then the way that they hedge is based off of gamma, and that can have either a tightening effect or a loosening effect on the market. So if gamma is positive, that means that as the market basically moves higher, I hope I'm explaining this correctly, they're sellers. And if gamma is negative, as the market moves higher, they're buyers. And then the opposite on the downside. So this basically becomes a measure. What the language that he uses is sticky and slippy, even though slippy is not a word. I love it. So when you have like the positive gamma coming in, it makes the market much more sticky. It means that you can expect the market to trade a lot thicker in that area. There's going to be a lot more liquidity there. So like at 3,900, you can see the spike that kind of comes in. So if the market trades at 3,900, that added like liquidity that comes in from the positive gamma makes it more difficult for it to move through it. So price becomes sticky at 3,900. And if they are able to clear through 3,900 because there's so much selling because of an event or whatever it is, then it actually gets looser again and becomes even easier for the market to kind of go back down. And then it gets, you know, a lot thicker again at 3,800, where the market's going to become a lot stickier. And then your negative gamma is going to kind of be on the other side. So we can see here broadly, very broadly, that beneath where the market was opening today, there's going to be kind of more stickiness or liquidity or support, however you want to look at it, because you've got these spikes of positive gamma that are coming in, whereas above it, it's looser. It's like flat to kind of negative coming in. I guess a little bit of a spike around 4,100, but even that isn't too bad. And then, you know, by 4,150, you're back to kind of being in negative territory. So Bill's been posting this every day, and Bill, maybe you have something that you can add on that to help me with my explanation. That's kind of how I think about it and how I view it. But it's just a great additional piece of information when you're looking at levels and looking at spots for the marketplace where we just know, oh, it's going to be much easier if this market starts catching a bid to go back to that thought process of positive feedback cycles like I was talking about before. It's going to become much easier for this market to continue that bid because of, you know, the negative gamma profile, and that's entirely coming from 0 and maybe 1 day to expiration option contracts. Definitely 0. I'm not sure if the 1 day is included also. Maybe Bill can help me with that one also. So that's kind of what it's based off of, and that's important these days in the market because we've all seen the statistics on the degree of how options are being used now in the modern market. And I know Pat's had notes on it, Bill's provided notes on it, where we've just been able to read about just the explosion in 0 DTE options contracts, and that it's not even, you know, all retail. Like the initial thought process that you would have is that these are all the Wall Street bets, YOLO retail traders, and it's really not. It's partially them, but it's not entirely them. It's a lot of institutions and funds that are learning to use these tools in a way that they've never used them before. So I hope that helps. I couldn't read any of the comments while I had that chart up. And I see that Bill didn't write anything, so maybe he's not participating in today's afternoon meeting. But he and Pat are more knowledgeable than me on it, so I hope that helps. And yeah, it's 0 DTE for sure. It might include 1 day also. That's that part of that. It's a Bill question. Hope that helps. Cool. Scrolling back up a little bit from Elliot. Great call out off the pivot after Jay Powell spoke. It seemed like an A+ setup, but I was scared to really size up. Do you have any advice about how to not be a chicken? Part of it, I think, is just being in the business. From what I have seen over the course of my career, the best opportunities in the market are the fastest opportunities, and they're usually the scariest to look at. And I remember hearing that. I've heard that my entire career, even when I was a new trader, and then I've experienced it my entire career, even as I've become a more experienced trader. When markets are moving really fast like they are, that's when it's most scary. You know, you got to be making these kind of split-second decisions, like, are all the layers of probability on my side on the trade? You know, is the volume there? Is the setup there? What's my risk? How many shares can I take? Where's my stop loss? Like, you have to be... I don't want to say good enough, because I feel like saying that you have to be good enough is unfair. You have to be experienced enough to be able to recognize that, see all that, and execute very quickly. And that's how the best opportunities in the market are. The best opportunities in the market, I really do think, are the opportunities where it's triggering, like the second the market opens, and you either got stock or you missed it, and you had to be ready for it and be super on point and get it, or... there's an event like this and the market's moving insanely fast and you got to make that split-second decision on am I in or not, and if so, how much risk am I taking? And I think that there is a natural inclination, and this is probably part human nature, as a defense mechanism maybe almost, and it's probably not a bad thing for the most part, But there's a natural, I think, inclination that when you're making a split-second decision that you need to do it with less risk. And that's the hard part, right? Because on the one hand, if it is a split-second decision, you probably should be taking less risk because maybe you didn't have the time to properly analyze it. But that contradicts what I'm saying, which is that the best opportunities give you usually a very small time window to actually be able to take the stock. So you basically have to become skilled enough. Again, I don't want to say good enough or skilled enough. I feel like that's not fair. I think that really the proper word is experienced enough. Experienced enough to be able to see all of those important things that are making up the trade just faster than someone else. And the way that you're able to be faster than someone else and at recognizing if all the layers of probability are there and if this is an A+ setup and putting on additional risk and having that stop loss out there, I really just think that that's a time in the game thing. I really just think that's an experience thing. Now, there's certain things that you can do to help, right? If you've gone through my training program classes, I think in the journaling class or the psychology class or maybe both, I talk about things that you can do as a new trader to accelerate yourself through that learning curve, to become more experienced than others who are also maybe in the market. And basically what that is if you only work from 9:30 to 4 every day, every trade that you put on, you get one experience of that trade, and then you go home, and that's how good you get. You get as good as you got from taking the trades that you took during the day. But if you then do your trades with a journal after the market closes, and you write that stuff out, that's a second experience of that trade. And then if you have a partner that you work with, or a little group of traders, which is something I always encourage you guys to do, share your email addresses, just match up with a partner, create small groups for yourself, and re-review your trades with your partner on a day-to-day basis after the afternoon meeting. That becomes a second experience of that trade. And then if you implement like visualization exercises where maybe you didn't trade this hammer as well as you would have liked today, but a visualization exercise or a meditative type exercise where you close your eyes and you really re-envision that moment, how you felt, what your keys felt like, what your screen felt like, what that chart looked like, what was going on in that moment, and you see yourself redoing that trade the way you did it, and then redoing that trade the way you would have liked to have done it in an ideal world. That becomes a fourth experience of the trade. So by doing stuff like that, all of a sudden you can take 1 day's worth of trading and turn it into like a week's worth of experience. And if you turn it into a week's worth of experience, it's going to accelerate you through that learning curve so much faster than someone who's only working 9:30 to 4. That's going to make it so that you are able to recognize and take this trade and do it with that bigger size or bigger risk that you want to be able to do in the future, as opposed to the person, again, who just shut down as soon as the market closed today and isn't participating in our afternoon meeting. That person will not be as prepared as you will be to take this trade setup the next time it comes around. So hope that helps. So from Paul, so think of tomorrow more as Momo looking for a larger time frame. Yeah, I think that's fair. I think that's fair. Continuation for day 2. From Rex, hello Derrick. This morning the market price action was kind of hard to read for me. Yep, for you and me both. I was looking at Tesla this morning. It showed relatively strong at the open, but around 9:40 the Qs were breaking highs and Tesla created a 5-minute doji. All right, let me just remember what happened this morning. So 9:40, that's when the SPYs were stuck here real tight with those 2 inside 5s. I remember that. The Qs were the strong index. They were trying to break up here a little bit, and the IWM was giving us problems. And this was making me very, very nervous. The IWM was really kind of breaking down. But I remember at 9:45 saying, hey guys, as much as I'm nervous about the IWM, I think it's due for an extension bounce. And the SPYs and Qs have been holding in, so maybe they're able to begin to improve if the IWM gives the bounce. And it's not exactly what happened. SPYs and Qs didn't really improve. The IWM did, though. We saw a notable flip in relative strength with the IWM becoming stronger compared to like how the Qs were trading at about 10 a.m., which goes back to the price action this morning was the same tricky price action that we've experienced for 10 of the last 12 trading sessions. So I totally get the hang up there. I was having my own hang ups, especially with what the IWM was doing. So you're telling me at 940, you're looking at Tesla, you're looking at the Qs are breaking up, and off the open, Tesla was showing relative strength, and you are right, it was. And then at 940, you're getting a little bit of a tail here, and that tail is concerning you. This tail doesn't concern me too much, but let me read the rest of your question. Tesla kind of created a doji on the 5-minute candle, and I was trying to short some Tesla on that candle high, risking to the high. Would you say that the 940 time Tesla showed relative weakness compared to the market? No, I don't think so, actually. I don't think it's shown relative weakness. I think that it's struggling to give continuation because of its extension, which is different than relative weakness. Because not like if you showed me on the 940 candle or the 945 candle where the Qs here, yeah, fine. The Qs, it's a 940 candle. They tick highs by a little bit. Tesla ticks highs by a lot of bit. 945 candle is an inside 5 for Tesla. 945 candle is an inside 5 for the Qs. I don't think the Tesla was relatively weak at all. I think it was just stalling because of the strength. And I don't like that as a short because of that relative strength. So yeah, no, I don't think it was relative weakness. Hope it helps. From Andrew, I'm having trouble switching from a trending day mindset to a range-bound mindset. Do you have any advice and what clues? This is actually a great question because it's such a hard thing. And what clues do you look for early in the day to spot the difference? Yeah, for sure. This is a great question, and I think it's one of the hardest things because the approach that you should have to a market that is range-bound that day versus the approach that you should have a market that is trending that day should be very different. I think if you look back historically, more days are range days than trend days. So if you flip a coin on what today is probably going to be, there's a higher probability of it landing on heads than on tails if heads is a range day and tails is a trend day. But I think that it's much easier to make much bigger P&L on trend days than it is on range days. Range days are trickier to trade. So even though the trend days are going to be less often, that's where the biggest P&L can come from, and you want to try to be able to recognize them when they come. So that's one of the things, and maybe I should do a better job in the morning meetings of trying to get that message across, and I'm giving my big picture game plan. One of the things that I try to do in the morning meeting every day is I try to give you guys my thought process on what type of day it kind of can be. If I'm expecting that we could get continuation, or if I'm expecting that today's going to be difficult, if I'm expecting that I have a higher probability of getting a move versus, guys, today's a 50-50 and I really don't know. I don't like where we're opening. I feel like I don't have an edge. I don't have an advantage. So that's one of the things that I try to do every morning as part of my own process, and I try to present that to you guys. I'll try to do a better job using those specific terms again on if I expect today's going to be a range day or a trend day, because it is difficult, but it is really important. So what factors do I look for to try to figure out if today can be a trend day as opposed to a range day? Basically, a combination of news and technicals. That's what I'm looking at. I know that if a major key technical level is breaking, that there's a higher probability of a trend day actually coming in. I know that if there's a major news event that's going to be occurring, like Jerome Powell speaking, or we're getting a CPI that morning, or whatever, that there's a higher probability of it becoming a trend day as opposed to a range day. If we're just having a common gap in the middle of a range and there's no major news that's coming out, there's a higher probability of it being another range day and another consolidation day within that consolidation. And that is trickier. Also, what's currently happening in the market. If we've been going sideways and we've been ranging, you have a higher probability of a range. If we've been trending higher every day, you have a higher probability of trending higher. So those are some of the things that I look for when I'm trying to figure out in my morning game plan how aggressive I want to be based on how much opportunity I think that the market's providing on that day, which is, again, primarily going to be based off of those factors. So yeah, hope that helps. Andrew, thank you for the question. And it's a really good question. Mark's looking for a partner, if anybody's looking for a partner. Cool. Good stuff. You should use your T3 email, yes. If you have a T3 email, you should be using your T3 email. Yeah, Gilbert helping here with range-bound versus trend also. Cool. I'll let you guys exchange, whatever information you want to do there.
Then go back to it.
All right, cool. So I guess I got through the questions. Heck of a day today, and really good stuff. Sounds like some of you guys got it. What's so funny, Josh?
Heck of a day today.
Heck of a
Just
day
say the
today.
least. Like what?
I almost said a bad word, and then I changed it to heck.
Me too. I mean, I don't even know what to say about it.
Sometimes when I'm not on the radio, I say bad words, but no one needs to know that. All right, everybody. Have a great night. See you all tomorrow.